What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head into the next week. Quick plug before we get started. Don't forget to check out the links in the description below. Rawstocks Discord, where you get my custom callouts, the premium book study, as well as a lot of other valuable content, including the community, is in the description below. It's free to join. It's $10 a month to upgrade. Often running upgrade codes. Right now it's just 7-day free trial. I think all of the only 10 codes have been used, but we will be running specials again soon. Also linked to trying out a funded trading account. Many of you who follow me know that I recently passed my funded evaluation trading combine and am now an official funded futures trader. So if you're interested in learning more about that, there's a link in the description below as well to Top Step, which is the funded prop firm that I did my trading combine through. So without further ado, let's just jump into the charts. Today we have the weekly chart of Tesla pulled up, and you can see that we've come off that sell-off. Last week we had a little bit of a green week, closed up a little bit, ultimately set a weekly fair value gap in here between 196.37 and 207.68. So that is going to be a liquidity target when we start heading higher, where we might anticipate to see some rejection or some activity in that area. Also have a weekly fair value gap above here, coming in at 223.28, going up to 234.89. Also liquidity rests inside that fair value gap. None of those have been balanced out on the weekly chart. See, the week has started a little bit red. We did see a sell-off into the morning session. We caught a nice rebound, but ultimately we still closed red for the day. Now, on a weekly chart, if we're looking at price to continue to sell off, where are we likely to find some additional support? As you see, the RSI is down below 50, heading down to the 30, pointed down with today's trading. Nothing says that can't pop back up and see us come back up here into the 200s this week or into next week, but also the possibility that we continue to sell down. And if we continue to sell down, we're looking at this order block here of 166.71 all the way down to order block close at 152.34. So that's our likely target if we continue to sell down. Okay, we are, on other time frames, pretty exhausted from the selling, but that doesn't mean we can't sell down further. And we'll look at the other charts here in a second to see what might actually be happening or see if there's any clues there. So let's drop into the daily chart. The daily chart, we're coming off that earnings gap. We saw a low sit. We saw a little bit of a rebound, and then we've seen some doji candles, kind of a gravestone-ish doji, a dragonfly-ish doji, Another small trading day on Friday, and then today we get a kind of what appears to be somewhat of a hammer candle that can be a bottoming signal. Also, if you see here, we got our liquidity that rests here. We ran through all the stops that were in the buy orders here of people anticipating higher, ran those stops out, found support, bounced back up above that low. You can see on the daily RSI, and for those of you who don't know, RSI is the only retail indicator that we really use. Everything else is smart money concepts. But if you look on the RSI, we're significantly oversold, and we're still in the oversold territory with today. So what's likely to happen tomorrow? Again, we got this order block down here. If we continue to see selling pressure Tuesday, Wednesday, maybe even into Thursday, we might be looking to drop down into this order block. That would see RSI come back down even further, but because of how deep this dip was after earnings, we might even see RSI divergence set up here with a lower low. We've already got the lower low, we've already got the divergence, but that doesn't mean that price has to hold here. It could dip even further. If we're heading higher, where are we likely to go? Well, we're targeting previous high at 196.54. We're targeting gap fill all the way up the liquidity void here between the gaps, all the way up to 206.71. And then at that point, again, we got our weekly fair value gaps that we're targeting. And then there's all kinds of gaps and liquidity voids within this price range, as there wasn't much structure on the sell down. We don't have a whole lot of clear peaks. So we'll look on a lower time frame chart to identify any areas that might be of interest to us. We'll drop down to the 1 hour chart. On the 1 hour chart, we get a little bit clearer picture, right? We ran those stops out in one big 1 hour candle. We saw a rebound, a little bit of a fade into the end of the day. As we're starting to see selling pressure not be so strong, we're starting to see buying pressure kicking in. If you kind of draw, a pseudo trend line, you can see we continue to reject this area as we also are kind of developing, we could say here maybe a wedge-like pattern, or we could also take these lows here, and say something like that. Either way, the lows seem to be getting higher as far as this wedge is rising here, right? So we will anticipate that if it does continue in this wedge and doesn't straight dump down into the order block here, that we might see continued support on this trend line and then be looking for the resistance trend to break at some point. At that point, you'll be looking for breakout traders to be entering, and you could see price really rally off of that breakout. But right now, again, we got a lot of different peaks on the 1 hour time frame as far as liquidity targets go. And so you can see our indicator here has drawn out our 1 hour liquidity levels, also our previous week high, our previous week low, which we took. So we're in a new week low. And then you can start to also draw out peaks back up here. And that can give us some additional liquidity targets to the upside. See a little bit more structure, but still a lot of selling, right? And so these would be our liquidity targets, right? All these different peaks, which there's quite a bit of them, even though they weren't large rebounds. It gives us a lot of little different targets to take out. Now, the primary interest on the 1 hour time frame is going to be this fair value gap. So that's going to be, a target that we're likely to hit. Above, we could find rejection in there and then dump back down. Above that, we just have basically liquidity targets, resting in peaks, right? We don't have a lot of fair value gaps in here that haven't already been tested. Do have a little one back up here in the 230s, right? And then above that, we even have one all the way back up at 256. But we really got to get rallying if we're going to get back up there. But also, like I said, this is the main one that I'm focused on right now. This is the fair value gap that has not been closed out yet. And that fair value gap rests between 202 and 206. Kind of thought we'd hit it after we rallied up here, but then we saw some selling pressure kick back in. But with that rally today, we do see that there's still interested buyers, again, down in and around this price range that we've currently been hanging out in. The 180 to 190 price range seems to be an area that's of interest to bigger buyers, smart money buyers, institutions, stuff like that. So we'll be watching this 1 hour time, this 1 hour fair value gap to see if price pushes back up there and tries to grab the liquidity that rests inside that fair value gap. Let's drop down into the 15-minute time frame. The bright green or bright red is going to be higher time frame liquidity as well. Let me double check and see what it's set at. So it's set to 15-minute. So any chart you see these bright green or bright red lines on, those are 15-minute liquidity targets, and I use those specifically when I'm watching on the 1 minute or the 5-minute chart for my my scalp or day trade entries. So you can see on this chart, right, our today's activity here on the 5th is that we opened up, right, and we just had a cascade of selling, waterfall, right, falling knife, and then from there we saw a nice buying kick in, and we came up, we closed this fair value gap out. We got another little fair value gap right here, so that'll be our first target on a smaller time frame. Will be to hit that fair value gap that rests in these candles here, and that's going to be back up at 183, 183.40 to 184.23. Shouldn't be hard to hit if we start rallying up tomorrow. And then again, we got our liquidity target here at 191.66, our previous week high at 196.35. So those are our targets if we start heading to the upside. Now we'll drop into the 1 minute chart and we'll check out today's entries and see if we can identify where there was some premium entries. So if you look, some of the things that we've been talking and teaching about is using the London session to your advantage. And what you can see here is we never even tested the London high during the range itself, faded down, took the low, popped back up, showed no interest in going higher. So that could be some indication that you'd be looking for a short entry. We've seen similar things before where we've popped back up into maybe the middle range or less of London or the pre-market session, and then we've sold down from there. So similarly, if you're looking for that and using London as your guide, you can see 9:30 open right here. We'll try to pop back up, right, just to this liquidity level right here in this wick, and then we sold down from there. Your only indication of a smart money entry at that point in time would have been this fair value gap that gets laid here at 9:38. And you can see we pop down, we trade back up to it. It does look a little risky because of this bullish engulfing candle here. And then from there, the fair value gap held and we sold down. So where would have been your targets? It would have been these blue lines here, which are previous week low. Nope, previous month low would have been your liquidity target. If you were using some of those as areas to enter or exit. But from that point in time, if you were able to get the short here, it was a nice ride down all the way through the silver bullet. So we didn't get our silver bullet entry. We get two fair value gaps right into the silver bullet. Never really popped back up. We saw one wick that came back up. At this point, we were already selling down. That's not, in my opinion, that's not a great indicator of an entry there, although it would have been a great trade. The silver bullet takes us out to right past 11 or right near 11 o'clock. Silver bullet ends. We see, retail double bottom. We were able to catch a call, and we called this one out in the Discord in the live room. The entry was, again, watching this low get taken, which also took the previous low. In this ride down here, took the previous low that we had already established right after earnings. My entry came down in here after I started to see price trade up to this level. Okay, we didn't get that perfect bottom, but pretty close to the bottom. Other than that, there was no breakout candles, so there was no, not a whole lot of indication. I just saw selling pressure decline. Using the RSI, also saw we were oversold and rising. And then you don't get any necessarily any smart money indication through the rest of that. You do get a fair value gap here that really doesn't trade back down into. And then we caught a nice rally above that. You could have waited for your smart money concepts, indicators to let you know where entries were potentially at. And here we do get a small fair value gap that we traded back into. And you get a second fair value gap right there on a breakout or a break of structure, right? That would have been more or less your actual confirmation. Late to the trade compared to where we grabbed it. Again, I was able to grab as we came back to this order block, saw a breakout candle, and I got an entry somewhere around here. But if you waited all the way till your fair value gap, right, and then it trades back down to, enter in the fair value gap, stop would have been at this low right here. There's your low risk entry. And then let's look at what that would have been like as far as a 2-to-1. Then we'll see if we still hit the 2-to-1 on that trade. So right there, we're already at a 3-to-1. If we just targeted like a previous high from over here, if you were to look at the 2-to-1, hits very easily, right? And then ultimately, we end up trading back up to these levels here. Don't quite get the 7 back up to this. But if we look at maybe the breaker block, I bet we trade up into that breaker block. So here's how to use some of the different smart money concepts blocks. Okay, there's your breaker block. Breaker blocks. I normally have breaker blocks in yellow. So there's your return to the breaker block. Breaker block ultimately held, and we saw price kind of fade after that. I took exit right up here, basically perfect exit, nearly perfect entry. Ended up $1,200 on that trade, like 66% or something like that. And we called out that entry and we called out that exit in the premium section under the call outs in the Rawstocks Discord. Other than that, no additional entries. We will continue to cover the daily analysis as well as some of the entries that we take using smart money concepts and other tools through on the next session. So good luck on your trading. I look forward to seeing you guys on the next one. Again, don't forget to like, subscribe, check out the links in the description below. Really appreciate the support on the channel as we continue to grow. All right, take care, and we'll see you on the next one.